Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good afternoon. Welcome to another Ask the Experts, where we bring you the finest experts in the areas of financial, health, legal, home improvement. I'm telling you, today I'm so excited. I should pat myself on the back because you've been asking for us to have a mortgage lender on our show, and that expert, which is not easy to find, but I'm going to tell you something. We found one of the top mortgage lenders in the state of California. We are so blessed. Let me welcome you to Jackie Barikhan. Hi, Jackie.
Hi, how are you?
You look good. You look fine now. We fixed it.
Yay!
Yay. You're looking good. So, Jackie, first of all, I'm so glad we have you with us. I know very little about mortgages. I could never be an expert like you. You know, I know the mortgage business isn't so great right now with what's happening with loans, but you know what? We got the best, and we're going to educate people. And you know what we want people to do is, if you're buying a home, instead of just looking at who has the nicest website, we brought you the best. So when we give you Jackie's phone number, write it down, keep it. Jackie, tell everybody about your company.
Tell me about my company. Well, gosh, I've been in the industry for over 25 years. So it's been around the block a little, which is experience, right? I have learned all the different loan programs that there are to know. I've got, your conventional loans and your FHA loans and your jumbo loans and your VA loans. And we love doing those loans. And we've been super busy with them in the last few years, as you can imagine, when we had interest rates in the twos. But the last few years have been, or the last year and a half, I'll say, has been a little bit more challenging for those types of products because interest rates at current moment, we're probably close to in the sevens at this point for interest rates. So we're hoping they come down. We're thinking somewhere in the next 6 months to a year, we're going to see better rates, but there's still opportunities out there.
Oh, it's great to hear. Well, we're going to jump right into the show because I've got so many questions for you. First, awesome. What is a bank statement, and how is it different from like a traditional mortgage loan?
I love that you asked me that question. That's probably my favorite type of
Good
loan.
Question. I'm just glad we've got you, because I got tired of answering people's letters going, we've got somebody coming up. She's starting this month.
Yay. I'm so glad to be here. Again, thank you. So bank statement loans, gosh, in a simple way to put it, it's just another way to prove your income, right? So for people that are self-employed, for people that are, small business owners, large business owners, contractors, electricians, plumbers, lawyers, doctors, financial planners, realtors, you name it, truckers. We've worked with hundreds and hundreds of people that own their own business. And sometimes when you have a good CPA, we'll just put it this way, your CPA finds ways to save you money on your taxes. So the bottom line net number on your tax return doesn't always reflect exactly what you really make. You pay less money in taxes that way. So the bank statement loans come into play. And about almost 6 years ago, I think it was, we started with a group of small independent banks and credit unions and said, there's a whole sector of society out there that doesn't or can't get loans because their tax returns they don't have W-2s and pay stubs, and they're a little more creative, So we can show you a sector of society that would be a great risk, and they can prove that they can pay their bills, but they just can't do it with the normal way. So this product, we were one of the first people out of the gate with it. Since then, it's kind of come into a lot more people are doing this product now, but we really love it. We're experts at it. And it's a way of proving income. I guess if you could say if you could size up the entire mortgage industry in 3 words, okay? Ability to repay. That's it, right? We want to know, how can we get our money back if we're going to loan you money?
Right.
So on a bank statement loan, we can see the cash flow of your business. We can see the money flowing through your bank account if you own a business, and we're going to have some kind of an expense ratio for you, but it's going to be probably a lot less than what we would see if we looked at your tax returns. So tax returns aren't even part of the equation. We don't even look at them. It's strictly bank statements that prove the income. Does that make sense?
Yeah, oh, absolutely. I'm looking down at my phone because we're getting texts from viewers right now. There's one of these questions. I've got so many of my own questions, but
Awesome.
this one I've got to ask you because you're hearing about it in the news. I don't know if you know too much about this. The person, Bob, said, first of all, he said, I'm one of the ones who wrote a letter to you asking you to bring on a mortgage broker. But he wants to know, he keeps hearing the president talk about making loans easier for people with bad credit and harder for people with good credit.
Ay,
Do you
ay,
know anything
ay.
about that?
You can't always believe everything that you see on the news. These days we've got some crazy stuff happening in the world, which is a whole nother topic for another day. But
Yes.
I would say, common sense thinking rules are the most important, and using bank statement loans, it's all about common sense thinking. It's all about, we do look at credit. We do look at, the income that we can see on the bank statements. We look at your, how well you've paid other people back in the past. We look at, you have a little bit of skin in the game. So you got to have some down payment money, but at the end of the day, if you have a 500 credit score, you probably shouldn't be buying a house. It just, you need to show some responsibility. And
Right.
so that's my 2 cents on that.
Okay. What are the eligibility requirements for obtaining a bank statement loan? Are they specific to income or credit score criteria? Do they have to meet everything?
Well, it's very similar to any other type of loan that's out there. Obviously, credit is important. The higher your credit score, the better your interest rates and the lower your down payment amounts. So if you've got a 700 credit score on a bank statement loan, you can put 10% down. If your scores are in the 650 range, you're probably going to need to put 15% down or 20% down for like a purchase, for instance. The other part of the question was
Well, they
the
want to know
income.
basically, does everything have to be in order? In other
Well,
words,
sure. Well, sure.
can you
The nice
slide
thing
a
about,
little bit on the credit score or not?
well, sure. I mean, credit wise, if your scores are lower, then you would probably need to put a little bit more down payment, right? So obviously, the higher you can work on your credit, if you can get your credit scores above 700, then if you're purchasing a home or you're refinancing a home, then you're going to get a little higher loan to value, is what it's called. So how much your home is worth versus how much your new loan is going to be. So at 10% down, that's the least amount the bank statement loans require for a purchase. And if you were trying to get what we call cash out refinance, you wanted to pull some equity out of your property, on some of our programs, depending on the lender and investor guidelines, you could maybe go up to 75 or 80% of the value of the home to be able to pull cash out if you wanted with a higher credit score.
What is, and this is just a person, I'm very curious. What are people's credit? Are people's credit any worse now with the economy, or is it still basically about the same?
You know, most of the people that we work with are traditionally, I would say in the sixes and 700s. That's pretty common. Every once in a blue moon, we'll pop an 800 credit score, but the average person is right in that range. Credit scores are, an indication of what's happening in your life. I am seeing, sometimes a little more debt. People are carrying a little more debt, which will cause your credit scores to go down a little bit.
Right.
So that is the world that we live in now. But so far we're not seeing a whole lot of defaults yet. So that's
Oh,
good.
good.
Yeah, not in the mortgage space.
Okay, that's good to hear. I'm so I'm I guess I worry a lot about when I see what's going on with the economy, and all you have to do is go into a grocery store and or a gas station or whatever, and then we've got this problem with the ceiling debt. So I'm curious, our people's with the way the debt is right now, is it any different? But it doesn't really sound like it is.
Well, I think a lot of it has to do with where you're at in the country too. I mean, as we are here in Orange County, California, where I'm at, it feels like a little bubble here. We're just like sunshine, happy days. Everything seems to be kind of normal around here, and people are still going out to eat. People are still going to the movies. There's still, plenty of business that's happening. But, we drove up to Los Angeles a couple months ago, and it was a different world up there. Not
Yes.
what I'm used to seeing when I go to LA, and it was kind of sad.
Yeah, I have
Yeah.
friends in Newport Beach, and I totally agree. It's like they don't like. What are you talking about? We don't have that here.
Right, right. I mean, yeah. We'll see what happens
So
with the debt ceiling. We'll see. There could be
yeah,
some
that's
interesting
true.
times ahead.
So let's talk about lenders again. How do lenders evaluate income and employment stability for a bank statement loan, considering that traditional income verification methods like a W-2 form may not be available?
Well, again, the bank statement loans are looking at the income that we can see using the bank statements as income. So tax returns, like you said, are not required. The W-2s are not part of the equation on a bank statement loan. The nice thing about bank statement loans is we can use common sense thinking, and I'll give you an example. Say, for instance, well, there's two types of bank statement loans. Basically, you can use 12 months of bank statements, which would be the most recent 12 months, or you can have a further look back period, which would be 24 months or 2 years. And sometimes with the 24-month look back period, you'll get a little bit better interest rate because it shows more stability and that sort of thing. But let's talk about what happened in 2020 and 2021. There were a lot of small businesses that suffered because of the, current COVID environment. So we wouldn't probably want to look back for 24 months with that person. But if we can look back at the most recent 12 months on their bank statements and see that business is back up again and things are rolling along and they're making money, then we would use that to be able to create their income basically to get the loan. So
Are you still doing business by Zoom?
I do everything by phone. Yeah, everything by
Good.
phone. Every once in a while, we go out and we'll meet a client, if they want that. But the nice thing about Zoom, I think everybody learned, is we can be a lot more efficient, than having to get up and go to meetings and sit there for 2 hours and talk about stuff. We can get everything done right here, right now, just like we're doing today, which is awesome.
Okay, here, Kathy in Newport Beach. That's who I was just talking about. Wants to know the different types of loans out there.
Different types of loans. Okay, well, in the early stages when you become a loan officer, right? When we all started out way back when, everybody learns the conventional loans. So conventional loans are like bought by the government. So that's Fannie Mae, Freddie Mac. You've probably heard those names before.
Yes.
Other government programs are your FHA products, which is kind of a lower down payment product for people that only have maybe 3.5% to put down. And then there's our VA loans for our veterans. We love our veterans. That's the greatest product out there. It's the best interest rate. If you're a veteran, you better take advantage of that. And those are terrific loans, right? But every single one of those loans that I mentioned all require the 2-year history on those tax returns, with some exceptions here and there. For the most part, tax returns are everything. So that bottom line net number on the bottom of those tax returns, if you made 150,000 a year and you had 50,000 in write-offs and your net number was 100,000, the 100,000 would be used to calculate your income towards whatever loan product it is that you're trying to get. Okay. So if
So
you're a
it's usually
W-2
always the
person,
net.
it's always the net, right? So if you're a W-2 person and you have a steady job and you've been working on your job for 10 years and you get, W-2s at the end of the year and you have your pay stubs that you receive every single month, you should definitely look at a conventional loan or an FHA loan or a VA loan if you're a veteran, right? That's the bottom line. But the bank statement loans, or there's some new product that's coming out for investors that's really, really interesting. We can talk about that another time too, if you like. But
Yes.
the bank statement loans are the new game in town. Different than if you think back to 2008, they had loans that were called stated income, or those types of products, which got us in a world of hurt, if you remember what happened in the housing
Yes.
market and things like that. So that was due to the fact that there wasn't skin in the game. Those types of loans, most of the time people were putting no money down, they were proving zero income, you know what I mean? So that's not smart, right? We don't want to do that.
It
So
wasn't smart. We found
no,
that out.
no, it was painful for everybody.
Yes.
Our houses all lost value, and it was not good. So using the bank statement product, it proves the income. It's a solid product. It just is looking at things in a way that makes sense. So common sense thinking comes into play. If you can have a little common sense thinking for a self-employed person, they should absolutely look at that product. At the same token, if you're self-employed and you think your tax returns might show enough, we could look at those tax returns and see what might work. I'll give you a story. I had a financial planner that came to me, and he was in Newport Beach also. And he wanted to purchase a home, and we looked at his tax returns and we gave him a pre-approval letter. And his pre-approval letter was for about 1.2 million, I think it was, somewhere in that neighborhood for his purchase price. And he had 20% to put as a down payment. And that would have absolutely fit as a conventional loan, and it would have been great. The problem, I don't know if it was a problem, but his wife found a house that she really liked that was like 2.1 million or something.
Oh, no.
I'm trying to remember. Memory doesn't serve. But nevertheless, it was a lot more than what his pre-approval letter was able to get him using his tax returns. But when we looked at his bank statements, we could see the cash flow. We could see how much money he was really bringing in. And again, with bank statements, they do create an expense factor, but it's not necessarily the same aggressive way that your CPA does, right? Your CPA is like, yeah, we can write off this, we can write off this.
Right, right.
You don't make any money. Oh, you're poor. Yeah. There's a lot of doctors and attorneys and realtors that are very poor on their tax returns, right?
Yes,
but
I
we
can
know better,
imagine.
right? So they're designed for that. So.
Well, first of all, I want to let everybody know that we're here talking to Jackie Barikhan, and she is a mortgage lender. Her phone number is 949-600-0944. That's 949-600-0944. You can also she's got a great website, www.MyLenderJackie.com, or you can go to oh, I love this, talkwithjackie.com. That's a great website. And I want you to write this number down, because we have this all the time. Maybe you aren't even thinking about buying a house right now, and all of a sudden, 2 months later, you're thinking about buying a house. You go, I heard that mortgage broker, and God, I wish I'd have written her number down. It's 949-600-0944. Jackie, I'm going to ask
You
you
get
a
me
question.
directly when you call. So, or if you go to the talkwithjackie.com, you can pick a time that's convenient for you. Just schedule anything and you'll get 20 minutes with me one-on-one, and we'll go through your situation, make sure that you understand everything, and get you a pre-approval letter so you can buy a house.
And you can tell by the show, she definitely knows her stuff. Jackie, I want you to kind of go over this again. How does the interest rate and loan terms for a bank statement loan compared to a traditional mortgage loan?
That's a great question. Let's talk about the investors that purchase these loans. Okay. So the government loans, the Fannie Mae, Freddie Mac, FHA, VA are all, government related loans. The bank statement loans are purchased by your Wall Street investors, your insurance companies, your hedge funds, your people like that. So, this is a loan that they consider a little bit riskier. I mean, technically they're not. These loans default way less than the other loans. But nevertheless, because they're being a little creative or they're thinking outside the box, they deserve to get paid a little bit more. But it's not that much higher. I would say, back when we were in the twos for interest rates last year, bank statement loans were in the threes. So they're about a point higher than a conventional loan on an average, depending on credit score, depending on a few other factors. So it's not like hard money. It's a little bit higher than conventional, but it makes sense because for some people, they wouldn't be able to get a loan at all, right?
Yeah, that's true. It's so important to have a really good mortgage lender. I've actually had people have told me that the way things were explained didn't make sense, but then again, they didn't ask questions either. They didn't want to look foolish in front of the lender. But I got to tell you, just, talking with you, you really know your business. So I'm going to ask you a question, and I always like ending the interview. Why should I hire your company?
Oh, thanks. Steve, I think it is complicated. Our industry is very complicated. And, there's people that like to use, a lot of acronyms. I remember when I first started in the industry 25 plus years ago, and I was listening to the words that were used, and some of them are so confusing. And that's not how you talk to a client. If I went to the doctor, I wouldn't want to hear all the medical terms in the way that they understand it from what they studied in school. So I like to keep things really simple, and I like to make sure that everybody understands everything, and honesty is important. I'm going to tell it to you as it is, and if it makes sense and it makes sense that it's going to help you, then we're going to do the loan for you. And if it doesn't make sense, then I'll tell you that too. So I think that's, look at our reviews online too. That's another thing too. I think reviews are important. When you can go look at your 5-star reviews, I think that tells you a lot from the people that have worked with you in the past and if they liked you. And so, we're skilled at all types of loan products. We can do anything from the A-paper conventional loans, all the way over to these bank statement loan products, which are our specialty. And we really know that product and we love that product. And that tends to be a major portion of my business. So if you were thinking about bank statement loans, I would love to talk to you. I know anything you want to know, I'll teach you.
I believe that. Now, do you just cover the Los Angeles, Orange County area?
We're all over the state of California, anywhere in California.
I'm so glad to hear that because somebody from the Bay Area just wanted to know if you cover that.
Yep.
So that is wonderful. The name of your company is Summit Lending.
Summit
The phone number is
Lending.
94. I'm sorry?
Oh, sorry. Sorry to interrupt.
That's okay. Summit Lending, right?
Yes. Yes.
949-600-0944, Jackie Barikhan. Her website is MyLenderJackie.com or talkwithjackie.com. And she'll be more than happy to answer any of your questions. The great news is she's going to be back again with us next month. And
Yay.
I've got so many more questions, Jackie. I'm
Awesome.
so glad you're part of our show.
Thank you so
And
much for having me. This was great.
we will see you next month.
Sounds great.
Thank you,
Thanks again,
Jackie.
Steve.
That's Jackie Barikhan. I said her name right. Summit Lending 949-600-0944.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk 4 TV.